Thinking about investing in London? It is a question on many people's minds. The city feels like a world of its own. It holds opportunities for those with £50,000. It also holds them for those with £5 million. This guide is designed to give you a clear map. It will show you where to look and what to think about. We will break down the complex world of London investment into simple, understandable steps. BSM Management Consultancy Ltd was founded to be that partner for investors just like you. So why London? What gives this city its magnetic pull for investors from across the UK and around the world? The answer is simple. London is a global hub. It is a centre for finance, technology, education and culture. This diversity creates a powerful and resilient economy. Millions of people come here to work. Millions of people come here to study. Millions of people come here to build their lives. This constant flow of people fuels demand for housing, services, and new businesses. Unlike smaller cities that might depend on a single industry, London's economy is a rich tapestry. This means it can better withstand economic shocks. The city's resilience is a key factor for long-term investors. History shows that while London's market can have its ups and downs, it has a remarkable ability to bounce back. Property prices may dip during economic downturns, but over the long run, the trend has consistently been upwards. Property is often the first thing people think of when investing in London. It offers two main types of return. You can earn a steady income from rent. This is called rental yield. You can also see the value of your property increase over time. This is called capital growth. Smart investors understand that different areas of London are better for one or the other. Your choice depends entirely on your financial goals. We can split the London property market into three clear categories to help you decide where to focus. First, let's look at the high-yield boroughs. These are often in outer London where prices are more affordable. Lower purchase prices mean rent represents a higher percentage of value. That gives you better cash flow each month. Areas like Barking and Dagenham, Croydon, Newham are popular for this reason. In these boroughs, rental yields of around 5 to 6% are possible, sometimes even higher. These locations suit buy-to-let investors who need regular, predictable income to cover mortgages and other costs. Next, the capital growth zones, areas undergoing significant transformation. Big regeneration projects, new transport links, major commercial developments can dramatically increase values over time. Think of Stratford, post-Olympics, Nine Elms, large-scale redevelopment, Wembley, ongoing regeneration, creating a new town centre. Finally, prime central London. This includes Kensington, Chelsea, Mayfair. Here, the story is different. Rental yields are typically low, around 2 to 3%. That's because prices are extremely high. These areas are seen as a store of long-term value, like blue-chip stocks of property. The market can be slow at times, yet over decades, these prime locations have shown remarkable appreciation. This strategy suits high-net-worth individuals focused on wealth preservation and long-term capital appreciation over immediate income. By the end of this guide, you should have a much clearer picture of how you can make your capital work for you in one of the world's most exciting cities. This is your starting point for making a smart, informed decision about your financial future. This journey requires a trusted guide, someone who understands the local landscape, someone who can translate your financial goals into a concrete action plan. They help navigate the complexities of the London market, from initial research to final execution. Their role is to provide the clarity and support needed to turn ambition into a successful investment. Throughout this guide, we will draw on the kind of expertise that makes a real difference when your money is on the line. Let's, begin exploring the possibilities that London holds for you. Beyond property, London is a fertile ground for starting or buying a business. Your budget will be the biggest factor. Match your capital to a realistic opportunity. We can break this into three distinct budget ranges. This will show what's possible with the funds you have. From a small online startup to a major tech company, London has a place for every level of ambition. It's all about finding the right fit for your finances. Under £100,000, Focus on low startup costs and high scalability. The digital world is your friend here. E-commerce businesses can be run from home. That avoids the high cost of London rent. You could start an online store selling niche products. Digital services are another strong option. Web design, social media marketing, app development. These businesses rely on skill and effort rather than large capital. A small food franchise, a creative agency serving local clients. They can be launched with careful cost management. With £100,000 to £500,000, options expand considerably. You can now consider businesses needing a physical presence and a team. Boutique hospitality is a popular choice. A specialty coffee shop in a busy neighborhood. A small, charming guest house. The health and wellness sector is booming. A yoga studio, a boutique gym. Co-working spaces are another growing market. More people are embracing flexible working. You could also enter logistics with a small warehouse, serving the city's e-commerce boom. If you have £500,000 or more, you can enter high-growth markets. Property development becomes a real possibility. Buy a property to refurbish and sell, or undertake a small new build project. Let's look at a real, though anonymized example. This shows how careful planning and local knowledge can lead to success. A client approached our partners with an investment pot of $250,000. They had two clear goals: steady monthly income, long-term capital growth. They were not looking for a quick win. They were patient and wanted a sustainable choice. That brief became the basis for a tailored strategy. First step, detailed research, not just current yields, a deeper analysis of future change. The team identified an outer London area on the cusp of major change. A new Crossrail station was planned. The local council had approved a new town centre. Prices were still relatively affordable at the time. Rental demand was solid, but the future potential was the key. No investment guide would be complete without a serious discussion of the risks. London may be a city of opportunity, but it is not a one-way bet. Being aware of the potential downsides is just as important as knowing about the upsides. One of the most significant risks is a market downturn. While London has proven resilient over the long term, property prices can and do fall. A recession, rising interest rates, a change in government policy. If you need to sell during a downturn, you could lose money. These large-scale developments can be subject to long delays or even cancellation. It is crucial to research the status and funding of any regeneration plans. Do not just rely on the glossy brochures. Look for confirmed funding and realistic timelines before you commit your capital to a project based on its future potential. We have covered a lot of ground. We have explored why London remains a top investment destination. We have broken down the property market into different strategies. We have looked at business sectors for every budget. We have even examined a real-world case study. We have discussed the risks involved. You now have a clearer map of the London investment landscape. The information in this guide should give you the confidence to think about your own strategy. This is where professional help becomes invaluable. Every investor's situation is unique. To begin this conversation and get tailored advice, contact BSM Management Consultancy Ltd directly. Take that crucial next step today. Contact BSM Management Consultancy Ltd on 073672893774